Alrighty. I'm just waiting to make sure this will works. Um, does this work? Yep. Alrighty. So anyway, welcome to the live stream this week. Um, I wanted to kind of go. I thought it would be interesting. I I had a bit of a broad topic, but I thought I would zone in and see how it goes. Basically, there's been a lot of headlines around the Strait of Hormuz, and I know I've talked about this for a while, but I kind of keep bringing this up every week, and then some. If we follow my newsletter content, um, but because the war in Iran is the thing on all the headlines right now. That's what's affecting, and oil's been topping the headlines for a while now. But what I wanted to talk about was more something that this morning, you saw in the paper. Yeah, first of all, actually go back to yesterday. Um, so today we're going to talk. I want to talk about some of the headlines, some stuff that happened yesterday, some stuff that happened today, but also kind of look at where talk about gold and oil, where those are going to go in the coming weeks, and what I guess kind of. But I mean, more importantly, I want to pull apart some of the policy headlines and the geopolitical headlines, because that I think is fundamental. A lot of people kind of miss the ball when they talk about price of oil, price of gold. That a lot of people focus on quantitative, but it's always, I think, qualitative tells you a lot more about the qualitative being the policy, foreign policy, geopolitics tell you, and understanding trade dynamics and or relationships are more telling of what could happen to the price of gold and the price of oil. And I mean, gold is a lot of gold is dictated by a combination of reserves, how much people hold, how much central banks hold, but also non-institutional demand. And I guess you could say institutional demand, but non-institutional demand plays a lot more role than people give it credit for. Give it credit. So if you're watching, if you haven't subscribed, don't forget to like. If you drop a comment, if you have a topic you want, or a question or a topic you want to discuss in the future. But if you have a question, drop one below, drop one in the chat, and I'll monitor it. But before before this, I'll start it off kind of with talking about gold. You know, share my screen. Let me go to my. I went to the World Gold Council and I pulled this Excel sheet like 5 minutes ago, and it's cool because it kind of shows as of April 20, as of this month, rough gold statistics, but it shows roughly the who are the like central bank holding of um like so central bank holding of gold. And you can see, so the US is the top holder, then Germany, IMF, Italy, France. So G7 is pretty much, and then I guess Russia. But Russia and what stands out is Russia and China. And I'll get to that in a second when we talk about geopolitics. And India sticks out as well. It's just because of BRICS. But you look, G7 countries are top, like to kind of top the chart in terms of gold reserves. And there's a bit of nuance here because I know, because there's this whole topic of de-dollarization, and I know part of the whole question on de-dollarization is there's two sides to it. There's more, could be multiple sides, but the two major sides um, you might hear a lot more about are on the one hand, this, people could push de-dollarization because um, because it's more it's safe, it's seen as it's seen as a safer asset for central bank diversification in their portfolio. But more fundamentally, the other side of it, and this is the trickier side, is countries like Russia, Iran, and China that have or North Korea, for example. North Korea, I don't think North Korea is on this list, but that's a good, really good example because they have a lot of sanctions on them. But if you have a lot of sanctions on you and trades done in the U.S. dollar, so your sanctions are preventing you from trading under the U.S. dollar. How do you buy things like energy or cargo or whatever, like products that you need to stock your shelves in your country? And that's where the de-dollarization comes in. These BRICS nations like India and some of these far eastern like China and India type nations, they want to essentially, and I can actually pull up, maybe I may as well just pull up um BRICS. 1 second. um open let me just open a new window quickly. But sorry, I'm in incognito lyrics, and I kind of want to do this because I'm going to show you on a map roughly where these are. But you see, if you notice something funny about all these nations, a lot of these nations are countries where they've had um, questionable relationships with the United States. I mean, UAE, not necessarily a lot. Some of them are like I know Brazil. I believe Brazil had a was communist for a while. Um, Let me check. Let me just double check that. Yeah, Brazil was communist in the. I have to find the exact years. It started in the early 1920s, and I wonder until when. 1930s until the 40s. I don't know. There's a lot of there's some. I can. I'm not going to dwell on that the timeline there, but I know like Brazil, for example, had communists, and they're like actually, you know what? I may as well wear. Kind of bothers me. For those of you watching, so this is supposed to be live unscripted, so that's why I don't really have notes prepared. And I'm just kind of I figured it'd be interesting to kind of um, Google. But anyways, doesn't matter. But I know Brazil was communist at a certain point. And I know China, and I'll get to China in a bit, and Russia I'll get to a bit as well. But and Iran obviously. But but look at countries like India, for example, where India and China are major trade are like the major suppliers for, and they provide a large bulk of I guess I don't know what the term would be like cargo or for, like 'cause the type of stuff like when we order like they provide a lot of cargo to the West for lack of better words, and so they provide a lot of cargo to the world, and so when you're relying on the U.S. dollar to trade under, you're basically relying under the good faith. You're basically acting under the good faith that, or assuming they'll have a good faith with the U.S. And I mean, the world. I mean, if anything, the world. A few months taught us that a lot can happen in a few months, and a lot and relationships that you had at a certain point could fall. So and again, when you I mean when you deal with countries like China and Russia, or China and Iran, where you have leadership that doesn't change, but then you're dealing with countries where their foreign policy changes every 4 years, 4 to 8 years. You run into this issue where you have one where you have the trading partner like the US again. You can only really be you can only really have a consecutive years of the same foreign policy before a new president comes in, and that's assuming they get reelected every 4 years for the second from after 4 years for their second term. Imagine you only had a one-term president, and then even if they came back after, and there was a break like Trump, for example, you went from Trump policy, Trump one, I call Trump 1.0 because he was a lot more tamed in his first term. Then you went to Biden policy, which is reversal of Trump policy. And I get and I without getting too political, but that's where we are now. And that's important because you look at the way Biden versus Trump dealt with countries like China and Iran and Russia. It's very different. And if you look at the price, if you look at that's where we kind of get into. I remember that's where we get into gold. We can kind of segue back into gold. I remember let me pull up gold. Um, let's trading view. Let me just pull up trading view quickly. Um, yeah, sorry, Google. My browser does that a lot. Switches to here we go. Gold, USD per ounce. So, wait, turn off. Let's go 1 month, 3 months, 5 days. I mean, sorry. For the past 5 days, we seem to drop. But then if we go, let's zoom out 3 months, and then we'll see 6 months. And we saw a major goal. And I remember actually, let's go back go back more. So I remember, no, it was after that. So I remember when gold was about. I remember following gold when it was about we were in 2019, 2020. I remember I had a friend of mine who told me you should buy gold, and at first I was like I was skeptical, and I remember I didn't buy physical gold back then. But what's funny is and that was like years ago. That was like 2019, and I remember when I was following when you follow these like you follow like that was the end of I think that was the end of that was yeah, that was the end of Trump because Trump was 2020 Trump the Trump Biden election was 2020. So I remember then 2020 hit and then where's 2020? Back to 5 years. No, I gotta go back. Wow, 2020 was more than 5 years ago. um and where is it? So I mean gold almost soared. So you I mean it's and where gold really began just to take flight was so getting back to here is where gold really began to take flight was post 2020 with the aftermath, the delayed shock from in the market. You had the pandemic broke out, and then 2021 you had the crash, and then gold soared. And again, the reason why gold, the typical answer you ask most institutional guys or institutional people is, oh, okay, well, safe haven asset. People, it's an inflationary hedge. But and again, I think that's brushing over, what that essentially means. What they're not really telling you is that it's people are trusting the physical asset more than they trust the dollar, which makes sense when you think about it from an inflationary. Inflation's going up. There's a recession. Inflation's going up. The government's spending, and then inflation's persistent on that as well. So it's like a vicious cycle, and then that's assuming they cut interest, and then they cut interest. Sorry, that's because they were, and then they hike interest rates, so things get more expensive again, and it goes until it kind of eventually slows down, and the government can lower interest rates again, and that's when inflation picks up again, and that's in theory. And if you pay attention, if you read the nuances, which is what that sentence kind of leaves out of the picture, is what was going on. What was going on during that time? It's look at the policy, and well, part of the whole and while I think part of the whole, like you could say on the one hand it rose because people again they were afraid of the recession, but I think the reason it got so much momentum from the retail market, which is what really propelled it high to really propelled it to what it was people shifted their mind when they shut down entire countries and they blocked trading routes. It's almost like typically in recessions, you might have a little spike in gold because okay, well people inflation's really high and people wanna risk on risk. Well, sorry, are trying to offset some of their, I guess, rebalance to avoid some of the inflation, to basically save their money from inflation, for lack of better terms. But when they end up with, but when I guess they get when you get this extreme fear scenario where they don't know what's going on, inflation's going up, and policy, and no matter what the government does to fix it, it seems to be getting worse. So that's where you get this massive, and I mean before that I know like I never really heard. I mean, then again, gold only picked up to what it like. This is the highest gold has ever been in ever, and again, I think it had to do. It was this catalyst where they shut everything down, and the economic policy was just so unclear too, and there was so much back and forth. Um, now, what does this have to do with, I mean, why I'm going into this background is more recently, if you zoom in, gold kind of fell a bit, and past month, it's kind of leveled out. Past 5 days, it looks like it's almost like a 45-degree angle, and it's been extremely volatile. And I think part of this is, it's kind of like when you're trying to shake, it's almost there's a lot of it's a there's a lot of fear. I think there's a lot of fear towards gold, and I think the narrative towards gold is shifting to like the historical way of saying it. People turn to gold. The historical saying of people turning to gold simply because it's a safe haven asset is kind of shifting. I don't think that's necessarily true anymore. And I mean, because if you were to go by that logic, and think about all the how do I get rid of this? Let me just reload it. If you were to go by that logic and say, no matter what, as long if there's some geopolitical shock or there's some foreign policy shock, gold's going to go up, and because that's typically what they would always say, geopolitical risk index goes up, gold goes up. Um, but the reason that's not true, and I mean, the reason it's kind of shifting is because look at what's happening now. Um, look at what's happening now with Iran. Look what's happening with look at between first we had Iran, then we had or sorry, first we had Russia, then we had or sorry, actually even going back even further. First we had Afghanistan, then we had and gold was going up. Okay, then we had Russia, and gold was going up. And now we have Iran, and Iran's going down. And I think what the catalyst was the de-dollarization tactic. Um, there is, I always talk for those of you again that follow my newsletter, and I've talked about this in previous podcasts or previous live streams. With this Russia, China, Iran access, and it's this economic access. It's this access of these major economic power, I say global powers, but they're using economic warfare where where and it's beneath the surface, and it's all happening like kind of beneath the surface. But because Iran has the oil, China has the critical minerals through the Belt and Road Initiative, and Russia has natural gas. And there's the Power of Siberia one. They built Power of Siberia pipeline number two, which goes into China, and they're trading in the yuan, sorry, the yen and or the yuan and Chinese yuan and the Russian ruble. That's how they're trading. So they're essentially going away from they're trading outside of the U.S. dollar. Um, but then Iran has no. You have to go through countries to get to China, and China relies heavily on the crude for the expansion of their Belt and Road Initiative. They need it for their infrastructure. They can't sustain themselves in a long-term conflict with Taiwan, for example. And maybe I can get into that too, but um, for example, I know sorry, China and Taiwan have a long history of tension, and more recently with like the Chinese Armada, for lack of a better word, they had 1,000 fishing boats, and it was more of a again that's more of a power play, a power trip to try, and I think that was more of a way to kind of show muscle, and it was a kind of big bark but no bite kind of thing, but but China, I think China is worried. I think China partly did that because they're worried, and they want to show their strength because I think they're also worried because a lot of the military technology too that the Israelis and the U.S. knocked out was Chinese and Russian technology. So it's also a saving face thing here too. And the Chinese had they pulled out. I think they chickened out, but they offered Iran fighter jets, Chinese knockoffs of U.S. fighter jets. Um, and again, I think Trump had threatened them, and they pulled out. And they said, "No worries, we won't do it, but we won't give it them." I think. But anyways, that's not important. Without digressing. The point is, um, all this is happening, and the price is slightly plummeting, and or not plummeting. I mean, the price is very volatile. It looks like it's plummeting in some plummeting. I should go. I should zoom out. It looks like it's plummeting in some cases, but then it's very choppy, and it's on like it's on like very unclear the direction. And again, this is part of the uncertainty. And I think where we might be able to gauge a bit of the direction will be if you look at like the World Uncertainty Index. If there's higher uncertainty, then it becomes less and less clear. But if but there's less uncertainty than there's then there is could be more clarity in terms of direction. I don't think there's a people can really say. I think gold's going to go up in the long term, but I don't think people can really say tomorrow it'll go or in the next 7 days. I think gold will go up X percent. I think a lot of that's speculation. I mean, there's quantitative models that predict that, um, but I mean, if if the volatility in the market in the gold market's reacting to again the volatility in the foreign policy um, in foreign policy. That's I think what we're witnessing. Gold is more susceptible. Is becoming more and more susceptible, not as much to safe haven demand, but more to foreign policy demand to um, foreign policy shifts. And I think that's what's happening with gold. And now where this ties in with oil. Now I kind of wanted to tie this in now with where it goes with oil. That let me pull it up. I found an interesting chart. I pulled up a few charts before this because I thought it would be interesting to go through. Um, where is it? Ah, so here I'll just put the link in. I can control X. So I'm sure you're familiar. I mean, if you're watching, you might be familiar. I'm not 100%. I don't know if you're familiar, but um, basically, OPEC plus OPEC. Kind of give some backstory actually, and maybe I'll put the link to my newsletter. I talk about the backstory about OPEC, OPEC plus. OPEC was founded in the 50s, and then in the 70s, or no, in the 2016, they had created in the 70s. It took there was something else in the 70s. In the 2016, they founded OPEC Plus, which is where they just invited Russia and China and some other countries to join in. Um, but the idea is it basically became a global pricing power, and essentially what these are productions. So these are productions. So basically, OPEC sets policy. They'll either say increase output by X number of barrels, or decrease, or hold this hold or hold. And basically, what they're doing is they're creating what they call like they're a band within which they want to keep oil priced at. And so essentially, they're creating this floor, that's part of the reason why OPEC Plus was formed. Was OPEC was regionally concentrated around the Gulf. But when they expanded, and I remember there was stat that about 40% OPEC Plus accounts for about 40 to 50% of global oil production. So you can imagine, and so that's kind of so pre OPEC Plus era. Which is again why they created OPEC Plus, was you had shale. U.S. could ramp up shale production and out and outproduce and I guess outproduce the I guess produce so much shale that that the price of oil could fall despite them increasing their production. So again, this is kind of like a strategy. So the core OPEC, but then the OPEC plus with Russia and with this, yes, and you can kind of see here. So you have the original OPEC members, and then you have your OPEC plus and your OPEC plus, which were later on. And again, these help again with production, and that's and I mean, so this is their production. So they are essentially creating a floor. So these are, I believe, this is in million barrels per day. The number of so it's total number of barrels per day. There's actually an image I was going to show. Uh, shoot, it's on my phone. It's on my computer. But what's interesting to talk about too is if we're going to talk about inflation, because I want to get into the inflation on the price of. I'll touch the image below after the live stream ends if you're interested. But um, basically, um, when they increase when they decrease, so if they cut production. So I think we can look at you can kind of see. So it 2020, so we're only quarter two, 2026. Yeah, I guess these are the full year. We'll just look. So 27.21, it increased. So I remember here so it increased here and it increased, but then here they cut it in quarter one, it cut, it decreased. And I think this was in part, I think. So this is where I always say geopolitics and foreign policy play a lot more important role. If I was just looking at this number, I would say, oh, okay, well, they probably cut production. So what happened? I remember there was, that when the Strait right now you have an issue. We have the issue with the Strait of Hormuz, and again, there's a blockade. The whole thing with the Iran and the U.S. and Israel now, and the Iranians put up a blockade. So the Americans put up a blockade, but then the Iranians pulled away, and now they're tolling $1 per barrel paid in crypto. Bitcoin, and I think they were saying like you had to email the Iranian authorities, and then dock at their port and pay them the money, and then they let you through. But then um, now they're putting the blockade up again, and they boarded three ships. Um, they boarded three ships, and I think they seized another vessel today. They also been laying mines in the strait, and so you've seen this. So I think part of what's happening here is for example, take Iraq and Kuwait for example. Iraq, Kuwait. The only way I can show you on a map. Let's just Google Maps. So Kuwait and Iraq, the only way they're getting their oil out of the region is through the Persian Gulf, through the Strait of Hormuz, and into the Gulf of Oman and outwards. And so and Saudi Arabia too, because Saudi Arabia is now blocked by they only have the Suez Canal getting out through the Mediterranean, but that can become very congested. So you run into an issue now of you run into the kind of the issue with how do they get their oil out. So back I wrote an article about this a while ago, about a month ago or so. But there was a thing that apparently Iraq's output was cut by 1.5 million barrels per day because they couldn't get their oil out quick enough. And again, that's going to spike the price of oil. And so, and again, when we're talking about why it's being cut, it's because again, I mean, let's go back to the chart. Look at their yeah, Iraq, Kuwait, the original OPEC founding, two of the larger not the largest, but two of the larger producers are blocked from essentially getting their energy out. Um, I think where is it? C 1.5. I think yeah, that like 1.5 million barrels per day. Now I swear. What was it? Now, why did I not skip it? Now I'm gonna pull up the other chart. Just wanted to pull up the other chart. But if you look at no, not that file. I found this the page by the OPEC, the world oil output, and they have a cool like dashboard. We can kind of see some. These are charts that come out of their energy outlook. They have an energy outlook every year. I believe they update it, but it's outlook to 2050. Um, and we go to charts, and we can look at energy demand, and I kind of want to show that. Where is it? Where is it? Or there's a chart I'm looking for. Well, this I just before I'm scrolling through it, like the this is another thing too. India has a large energy demand, and India had paid. Believe India. I saw an article too the other day, about a week ago, that India had paid the toll and brought a bunch of ships and basically bought some Iranian oil, and they'd arrived, and and again that also brings into another clear assumption. Iran is an interesting case with oil. If you were to look at like the largest exporters of crude in the region, Iran wouldn't make it into the top five. But then when you look at exporters, but then but what's funny about that is because they're one of the largest. They have one of the largest oil reserves in the region. But what's funny about that is how they exporting their oil, how they're exporting all this oil. We see all these things. Iran exports the oil to India. How are they not making it to the top? Top list? I mean, with nuance, but how are they not making it to the top? It creates a question of, OPEC has these production, and they allow they have these production targets. So let's say they say we're increasing production by 2 million barrels per day, or we'll drop production by 2 million barrels per day. But Iran's trading on the shadow fleets on the shadow market because of their sanctioned, and so they're trading outside the U.S. dollar, they're trading illegally, essentially. Like there's sanctions on 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 purchasing on Iran, and countries in theory shouldn't be allowed to purchase Iranian oil, but then they'll still sell it. So what that does, that it undermines, it skews the statistics, but it skews supply statistics. We don't know actually how much oil that creates a margin of error of how much oil is actually on the market, which can kind of which is funny, because then there's that systemic risk. We don't know how much. We don't, in theory, then by that logic, we don't know how much, or that happening. We don't know how the exact figure. We don't know how much money is on the market. I'm sorry, how much oil is on the market at a certain time. But where is it? There's a specific. I think it was oil demand. Let me just check the chat quickly. Let me just check the chat. But there's nothing. But charts. Let me see. Where is it? Ah, I think where is it? Is it? I don't know. Sorry, I know I can't find it. There was a very specific chart I was looking for, but is it here? Anyways, I can't seem to find it. I can't find the chart. But anyways, that was like the whole. I mean, back to what I was saying, like the whole again, like so if they're setting a so they're setting a pricing target, like they're setting a pricing target. So essentially, um, and I mean, actually to digress into this quickly, like if they're setting, they're so OPEC's essentially setting a floor for OPEC's is setting essentially setting the floor. So let's say they set the floor for, let's say they, or sorry, let's say they want the price of oil to. They need the price of oil to reach about $70. So I remember there was a while ago I read that I was reading that the Saudis need oil at a certain price, and I've talked about this before. But again, Saudis need a price of oil for a for to balance their budget. And the same goes with Iran and a lot of these other Gulf states. Um, and then again, so they need the price of oil to remain at a certain level to balance their budget because like more than half their sovereign portfolio. I think Saudi is about 60% of their sovereign. If I it's about 60%, I believe, of their sovereign portfolio like is tied up in oil. So you run it so again it undermines. So for example, when the Saudis need oil at a certain price, so they say they say let's cut production, but then the Iranians, but then the Iranians, I guess on a shadow fleet, they'll send a shadow fleet out to India, for example, and then so they're selling oil on the black market essentially, but but that's not a recorded but because it's on the black market, it's not necessarily a recorded transaction, so it skews the data on exports. So the price might actually end up changing, but they don't necessarily understand why. Just based on, and it's, again, that's because it's based on supply and how much are in the I guess that's based on supply. So how much their supply levels are gonna influence the price. Um, yeah. Anyways, that was that, and that's kind and then kind of now let's build now kind of tying that back to my whole comment on the Russia, China, Iran axis. That China for their so China has something to kind of gain from this entire conflict because or kind of something to gain from the U.S. being pushed out of the region and the Iranians winning this conflict. Which is again why I think the Iranians are so persistent on holding on to the strait and they don't want to sit down with there was an article this morning that I saw in the Globe and Mail that the Iranians are now refusing to sit down with the Trump administration. And I see a lot of people online say, oh, it's Trump's being Trump, or the Iranian, like, both sides of the aisle, kind of looking at it like on the surface level. But I think I think that they're persistent because if the U.S. controls the region, they will not be able to get their oil out, even if it's illegally or against the rule book, even for OPEC members. But then they're also going to, but then also China loses out. China needs this oil for the expansion of its Belt and Road Initiative. Um, and because there's if I mean China's kind of in a tight spot right now economically, so buying on the black market priced in yuan, or Iranian local currency. I don't actually know what their current buy with the Iranian currency, Iranian real. So I guess they're trading basically they're trading they're trading off the US dollar on the black market. So what they've essentially done is they're getting crude priced at a discount. And I mean so and I mean and when you're I mean they're in a poor economic situation. They need to they need they're expanding their economic outreach, like, which is kind of ironic too. But that's for another that's a rant for another day, for another live stream. But or another episode of podcast, but it all fall again, it falls into kind of falls into this category of vicious cycle where the Chinese need the oil, the Iranians can give it to them at a discount, and so letting the US into the region again is not an option for them. Um, yeah. Anyways, um, if you're watching, don't forget to like, subscribe, and turn your notifications on so you never miss an episode. And see you guys next week again at 8 p.m. Um, here.